Hi, and welcome back to the channel. On today's video, we're going to talk about 8 reasons you should consider to sell a stock. Hi, I'm Gerald Marquardt. I'm a certified financial planner. Been in the industry about 30 years, and we dedicate this channel to those 50 and younger for things you should have learned in high school and college, but for whatever reason, they never taught you. So let's get into our material today. There are 8 reasons why you should consider selling a stock or any investment for that matter. And we're going to put up a chart here right now just to show you an overview of what we're going to discuss today. Each one of these ideas before you stand on their own. You don't need several to make that decision. And so when we look at our last one, which is not on our list, you may also realize that may be a good thing to do in your case. So let's kind of get into the list that we have here. Number 1, you've hit your target. So you bought a stock, let's say for $50 a share, and your target was that you would sell when it hit 75. It hit 75, and based on what you wanted, you should sell the stock. The problem with this, of course, is that when you hit 75, you probably look at that and go, well, it might go higher. And so you tend to hang on until, something bad happens and the stock goes back down. So you want to consider that in some ways a kind of a rigid target. If you're happy with, in this case, a 50% return, you should take it, even though you would like to hold it longer term. Or maybe you might consider just selling a portion of it. Those are all possibilities for you, but certainly once you hit your target, that should be a reason for you to sell. Next is that the fundamentals have severely deteriorated. You look at the performance of the company, you see revenues are going down, not up. Earnings are likewise not doing well. And what you see in the news media about the company is not very positive. Maybe the CEO or the CFO left the company abruptly. These are all warning signs for you that you may want to go ahead and sell. Again, you want to analyze that closely, make sure you're correct, that things are not going well for the company, and you don't expect it to turn around anytime soon. Now, keep in mind that if, let's say, a CEO leaves and a new one takes over, it's going to take some time for that company to recover, mainly because they've got new people in place and new things that they have to do. So you're going to have to be very patient with a company or stock like this if you decide to stay the course. Number 3 is you found a better opportunity. So you've been tracking other stocks and other investments, and you think you found one that you're very interested in. Well, this might be an opportunity to sell a stock that you currently have to buy one you think is more promising that'll make you more money. Again, the risk here is that your new opportunity doesn't work out the way you want, and if you'd stayed with the other one, things might have been better. But again, we don't know any of those. All we know is that the opportunity is there for you to buy a position in a stock, and we mean selling a current stock you have. Obviously, you think the current stock you have will not perform as well as this new opportunity. But again, here's the decision you get to make. Sell that stock to buy a new one that you think will do better. Next to consider in this here is portfolio rebalancing. Now, we've talked about this in other programs. Portfolio rebalancing is important for you. You want to make sure you're not overweighted in 1 or 2 stocks in your entire portfolio, that you're balancing the risk of everything. You don't want to be 30 and 40% in a stock and that stock plunge and now your entire portfolio is at risk. So it's a good idea to consider selling stocks that are, let's just say, out of balance or too high allocation for what you want. This is especially true when money managers are doing portfolios. They have no real concerns about the stock they have if it means putting things in balance so that they take less risk overall. Next, tax loss harvesting. Now, tax loss harvesting usually happens towards the end of the year, usually in December. And what you're looking for are looking at stocks that have lost you money that you might be able to get a tax credit on at the end of the year. Now, of course, you can't buy back the stock for 60 days because, again, there's something called the wash rule, which we'll put up a chart on that as well. But think about that. Is this stock you have, say you're down $2,000, maybe you say, this is a stock I should sell and take a loss on, and it will help my tax situation. So at least I'll get some benefit back by selling the stock. Again, this is only true in a taxable account, not in your IRAs or places like that. But this sort of thing of tax loss harvesting happens a lot. Mutual funds do it. A lot of companies do this. And so doing this sort of things to take the loss, as it were, and reduce your tax burden may be worthwhile. Now, keep in mind, you can only wipe out up to $3,000 of losses overall on your stocks. But again, this might be something worthwhile for you to consider. The next thing is that we want to consider your investment theme being broken. In other words, you bought the stock thinking XYZ would do very well. You saw that they might grow internationally and that their earnings might really take off. But then you find out the company's not doing so well, that business isn't increasing. In fact, you find revenues are going down. That's a real problem. Now, it's one thing if they lost money, say, in one quarter and you think it'll come back. But if revenues are going down, that's a hard thing to get back unless management has a good reason why it is that revenues are down. So look at that very closely. Is your entire idea of investing in this company still valid? Do you still think it's going to make you money? Now, this is important from the standpoint of what Albert Einstein said, that the thinking that we have previously done where it created a loss for us is not the same thinking that's going to help us in a new endeavor. We want to make sure that whatever we're doing it logically and thinking it through. We want to make sure that we truly are looking at a case where the company's entire basis of investing in it has really kind of gone away. The next thing you'd look at is overvalued. Your company stock you had has done really well, and now you look at it and say, wow, it's selling at a really high price. Not just high price relative to the earnings that they're producing or in the future will produce. You think in particular about things like what are called the Mag 7, basically AI stocks. Certainly very high priced, and yeah, they're subject to go down just because of valuation alone. Not that they're bad companies, but they've gotten maybe out of whack in terms of where they should be value-wise. So consider that as a reason to sell your stocks. The eighth reason, of course, is that you need liquidity. You need cash for something. Maybe it's something you have to purchase, a car, or maybe pay off debts, or whatever the case might be. And so you would want to sell a stock, presumably one that you're down on. You want to kind of sell your losers, not your winners, and raise cash. Here, you're going to look at your portfolio and decide which stocks or stock you want to sell out of. Now, the last one I want to mention, although it's not on our list, is something I used to hear a lot from clients. They would say things like, I'm really worried about my portfolio. I'm very concerned about the stock I have. Those are a warning sign to you. If you're feeling emotionally attached to the company and the stock you have, you might want to consider selling some or all of it. It's not going to help you if you're sleepless at night thinking about what will the company do. Will the stock price go down further? There's an old adage on Wall Street that he who sells first sells best. You see that especially during earnings season. Stock will go down, and maybe the analysts don't like what they see in the terms of the numbers, and they'll sell the stock off. Just because they miss by a penny or two, let's say, of their projected earnings, doesn't really mean that you should get out. But if you're very concerned, and so much so, like I said, you're losing sleep over it, you have two choices. One, of course, sell the stock, or if you really still feel strongly about it, you want to, as they say, buy the dip. Buy the stock when it's lower. Now, again, these are emotional decisions you're making and something you want to think about long and hard. In other words, you don't want to make any emotional decisions or rash decisions unless you've considered all the possibilities. So there you have basically the 8 reasons to consider selling a stock. Each one stand on their own, and each one can help you to decide whether it's time to let this stock go or stay in your portfolio. You always have the right, of course, to eventually buy the stock back if you see that things are going a better direction for the company. But again, if you have a profit, you want to look really long and hard about that. I mean, you don't want to lose your profit just by watching the stock go down, down, and down. You want to, the whole reason of investing in the stock, of course, is to make money. And if it's not doing that, then again, you have to kind of take a hard look at what's going on with the company, with the fundamentals, and whether or not it's overvalued. So I hope this has been helpful to you. I hope you like and subscribe to the channel, and please leave a comment in the sections below. I'm going to leave you with my final quote: to invest or not to invest? That is the question. Have a great day.